Good morning, everyone. This is Anne-Marie. Today's Thursday, January the 31st. Here's a look at SPY on the day. We did roll right here at resistance level 1. Again, simple pivot points, Woody's pivot points. Consider incorporating them. But we did roll right here. Here was the level that I had. We had no candlestick confirmations up over this level. Confirming candle is a candle after the candle that breaks the level. And we did not have that right here sitting on the hourly chart. We've pulled back. I did shift this down about 9 cents from the chart that we looked at yesterday, and so that now sits as baseline support. I do not trade trend lines. It's not my thing. But when a level, a price level, collides with a trend line, I am much more inclined to pay attention to it. All right, and that's simply where it is that we are. I did tweet something yesterday on the StockTwits Network. It said, so many technicians are really calling for the fall. It seems like there's a little bit of an imbalance. And remember, the market does not like to take everybody with it. That's not an upside down pyramid that we have there. It's one with a very tiny point on the top. And so just a few people ride with the market where it is that it's going. So we need to think about that. It's kind of like the euro. Everybody's shorting. Imbalance come, changes come, and then, here we have the euro completely recovered. So that being said, what's the story here today? Let's see how it manages this edge. We're pulling back a little bit in the broad market, and but not very much. Still holding our own pretty well. And so what we have to do is watch these levels extremely carefully. If you are thinking about swinging something long, remember, your time frame should be tighter, your stops should be tighter, your targets should be tighter. This is not a space where we have accelerating momentum. We have dampening momentum. And in that damp momentum event, we really need to be cautious about how we stage a trade. Trading is not the same in every single environment. It's not. And those of us that would like hard and fast rules that we can live by forever, maybe another occupation would be best, because that's not going to happen. All right? We have to be completely adaptive and change when the market tells us to. And that means change the way we enter, change the way we hold, change the way we exit in these kinds of spaces that feel very toppy. Nevertheless, continue to run. Okay? So let's pay attention to that. Watch the levels break. If you see candlestick closes under 150, you know you've got price action to the downside coming into support level 1. If we hold that, then we're going to be caught in sideways action inside of here. If we fail, we know we're going to start stair-stepping down. The 50% rule, which has reared its head, puts this level at about 150.49. All right? So if the 150.49 level is the 50% level, and we did breach and hold it, just so long as we don't break this event right here, this chart tells us that we need to test up here. All right? Good luck trading today.